the one trouble that India presents is that its governments tend to have a fair amount of paralysis, endless due process, endless objection. Zoning is hard, planning permissions are hard, etc. And that has caused the very wise founder of modern Singapore to say that China is going to grow much faster than India because their government causes less paralysis. So these countries are different in the opportunities they present. Of course, we like India, and we kind of admire the democracy that causes the paralysis, but we still don't like the paralysis.
It's not ordained, however. If you'd looked at China 40 years ago, you would have not have, you wouldn't have dreamt of what would happen. So countries do learn from each other. I mean, and they should. I mean, and I think they've learned many things from the U.S. that they adapt. I'm not talking about India specifically. I'm talking about other countries generally. They don't take on everything we have. But if you looked at a country that was as successful as this country's been over a couple hundred years, you might figure there could be a few good ideas you could steal. And I think that you're seeing that around the world, and maybe they can improve on us. So I don't think I would feel that any impediments to growth that existed now are necessarily ones that have to be permanent. We ought to figure out a lot of ways to do business in those countries. My preference is obviously in something like insurance, which I understand, and where we've got terrific people. Both China and India do limit us right now quite significantly in what we can own of a company. And I really hate to take some of our managerial talent and put them to work for something we only own 25% of. I'd rather have them working on something we own 100% of. And so it will depend on the laws, but people in India are going to be living a lot better 20 years from now than they are now, as they are in China and as they are in the United States.
When you made investments during the financial crisis in February of 2009, why did you lean towards debt instruments rather than equity? For example, why did you invest $300 million in Harley-Davidson at 15% interest instead of buying equity when the shares were at $12? Today, they're at $33.
Well, I would say that if I were writing that question now, I might write the same question, but I'm not so sure he would have written the same question in February. Now, there were different risk profiles, obviously, in investing. And the truth is, I don't know whether Harley-Davidson equity is worth 33 or 20 or 45. I just have no view on that. I don't, I kind of like a business where your customers tattoo your name on their chest or something, but figuring out the economic value of that, I'm not sure even going on questioning those guys I'd learn much from them. But I do know, or I thought I knew, and I think I was right, that A, Harley-Davidson was not going out of business, and that B, 15% was going to look pretty damned attractive. And the truth is, we could probably sell those bonds, I don't know, I'd have to, probably at 135 or something like that. So we could have a very substantial capital gain, a lot of income. I knew enough to lend them money. I didn't know enough to buy the equity. And that's frequently the case. We love buying equities, but we love buying the Goldman preferred at 10%. Now, let's say Goldman, instead of offering me the 10% preferred and warrants, had said you can have a 12% preferred non-callable. I might have taken that one instead. I mean, the callable, there's a trade-off involved in all these securities, and obviously, if I think I can make very good money, as we did on the Harley-Davidson, with a very simple decision, just a question of are they going to go broke or not, as opposed to a tougher decision, is the motorcycle market going to get diminished significantly, and are their margins going to get squeezed somewhat, and all of that. I'll go with a simple decision. Charlie?
Well, of course, your one good answer that you simply didn't know enough to buy the stock, but you did know enough to buy the bonds, is a very good response. The other side of that is after all, we are a fiduciary for a lot of people, including people with permanent injuries and et cetera, and to some extent we are constrained by how aggressively we buy stocks versus something else. And when you mix those together, why, you get our investment policy. I think generally speaking, you raise a very good question. I think very often when you're looking at a distressed situation and buy the bonds, you should have bought the stock. So I think you're looking in a promising area.
Yeah, Ben Graham wrote about that in 1934, actually, in Security Analysis, that in the analysis of senior securities, the junior securities usually do better, but you may sleep better with the senior securities. And we, as Charlie points out, we have $60 billion of liabilities to people in our insurance operation that in some cases extend out for 50 years or more. And we would never have all of our money in stocks. I mean, we might have very significant amounts, but we are running this place so that it can stand anything. And a couple of years ago, we felt very good about where that philosophy left us. I mean, we actually could do things at a time when most people were paralyzed, and we'll keep running it that way. Area 6.
Mr. Munger and Mr. Buffett, thanks for having us here. I recently joined a new organization, and for me to succeed there, the culture of the organization needs to change. So I'm interested in hearing on thoughts about how do you change culture of an organization, and if you're building a new organization, then how do you make sure you have a strong and unique culture?
Well, I think it's a lot easier to build a new organization around a culture than it is to change the culture of an existing organization. It is really tough, and I like that fact in the sense of Berkshire. I mean, it would be very tough to change the culture of Berkshire. It's so ingrained in all our managers, our owners. Everything about the place is designed, in effect, to reinforce a culture. And for anybody to come in and try and change it very much, I think the culture would basically reject it. And the problem you describe, if you want to walk into, whatever kind of organization you want to name, I got to be a little careful here. It is tough to change cultures. Charlie and I have bucked up against that a few times, and I would say if you have any choice in the matter, I would much rather start from scratch and build it around it. But I've had the luxury of time with Berkshire. I mean, it goes back to 1965, and there really wasn't much of anything there, except some textile mills. So I didn't have to fight anything. And as we added companies, they became complementary, and they bought into something that they felt good about, but it took decades. And at Solomon, I attempted to change a culture in terms of some respects, and I would not grade myself A+ in terms of the result. Charlie?
Well, I'm quite flattered that a man would say that he's in a new place where he can't succeed unless he changes the culture, and he wants us to tell him how to change the culture. In your position, my failure rate has been 100%. And
yeah, Charlie started a law firm. Go back to what, 1962, Charlie, or what was it?
Yeah, I could move out, but I couldn't change the culture.
We can tell some interesting stories from the old law firm, but we'll go on to Carol now.